An investing expert is saying that 65% of Americans are doing the exact opposite of what they're supposed to do. What's going on is Anton from AntonDaniels.com. I appreciate you guys for continuing to rock with me. I want to have a conversation about what's going on in the market today, right? Because I've largely believed that anybody can be an expert when everything is going awesome. I mean, this whole run up, this bull market that we experienced prior to having a contraction is the stuff that dreams are made of. And if you are or if you were invested in any way, shape, or form in what was going on prior to this recent contraction and then official recession that we're experiencing correctly, this correction right now, then you won. You made a lot of money. I've seen a lot of people sell when the first pandemic hit and they got panicky and they threw a whole lot of money inside of the banks and things like that. And they caught a L. I mean, if we just want to be frank, they caught a L because I never had a bigger return on my portfolio than I did on the recovery, the quick recovery of what was happening during the pandemic as far as the markets are concerned. But let's deep dive into this, and then I'm going to give you my thoughts because I think that this person is absolutely right. It said, if your favorite store was offering 13% off the merchandise, chances are you'd be filling up your shopping cart. But if you're like many Americans, you might find not quite, you may find yourself not to be quite as enthusiastic about a markdown when it comes to buying stocks. The average, according to the research, the average retirement portfolio only has about $65,000 in it today. And I think that that number is even skewed because it's not accounting for the extreme amount that some people have inside of their retirement accounts, their 401ks, their Roth IRAs, so on and so forth. It's not accounting for that. So the numbers are a bit skewed. But think about it. The minute that Bed Bath and Beyond or whatever the candle shop is, I don't even know what the place that sell all the candles and stuff like that. The minute that they have a sale, people are in there buying a ton of candles. But then on the reverse, whenever there's the value of these companies go down significantly, despite the fact that a lot of them are still profitable. A lot of them are still thriving. They have great leadership. None of the fundamentals of the business has changed. People get panicky. They get panicky. I'm going to explain it to you in a minute. The S&P 500, a common proxy for the broad U.S. stock market, is down 13% in 2022. But folks aren't buying more stock at cheaper prices. People are hoarding cash. That's what it's telling you, okay? Just 1 in 4 Americans say it's a good time to invest in the stock market, according to a recent survey, and 65% say they are keeping more money than they should out of the market for fear of investment losses. So let me tell you how people absolutely get destroyed when it comes to investment. First and foremost, they look at it as just buying stocks instead of investing in the companies that they love the most. They're not doing the research. They're not doing the deep dives. They don't understand the fundamentals of the company. They don't understand the management. They don't understand the profit and loss statements. They don't understand how much cash they have on hand, their debt, so on and so forth. They don't even know if the company is issuing a dividend or not, if it's doing stock buybacks or not. And they're not doing the research. Now, I did do a video inside of the Patreon. Link is in the description as well as pinned to the top of the chat. I did do a video inside of the Patreon to break down the things that you should look for when you're looking to invest in a company. But instead, they'll ride a wave, have a fear of missing out, that FOMO, and riding a wave is literally like gambling. So what you've seen, what happened with crypto, for example, was instead of understanding blockchain, instead of understanding crypto, instead of really deep dive and understand that it's largely unregulated and all of these meme coins and stuff like that, they didn't do the research. They just threw their money in it. I said, it's going to take me at least 6 months to all the way up to maybe 2 years to do a deep dive to fully understand something before I invest in it. And they laughed at me. And then everybody got absolutely destroyed. And then Bitcoin, which is the leading cryptocurrency, went all the way down to close to 19,000. It was insane. And so what people usually do is they're panickers and they're emotional. And so when everything is going well, they buy at the top because they have a fear of missing out. And then when everything goes bad, they sell at the bottom because they don't want to lose any more money. And it is a marathon. It is not a sprint. And so most people are only going to ride whatever the waves are. They're not going to put their boat out there on the water when everything is steady and calm. They want to jump out there with their pontoon boat when the waves are at the highest and then everything is crashing down. And it is such a stupid analogy, but at the same time, I also have to consider that in order for me to become even more successful as I am, and you that's watching this right now, you're gonna have to pay attention to what's going on, and you're gonna have to be steady. You're gonna have to steady that wave, and you're gonna have to chill. Let's continue. Those fears aren't entirely unfounded. Any investment has a potential to go down. The investment losses can be painful. I often say that, listen, if the fundamentals of the company is still sturdy, you don't lose until you sell. Especially for people who plan to live on their investment income in the short term. Everything we do, y'all know what we do in the bag chasers and the millionaires, right? Everything we do is with a 10, 15, 20, 30-year view towards what it is because A, we don't want to pay the taxes on it, so we let it continue to compound and roll over. And then B, on top of that, we got to make sure that we're steady and we're slow instead of being fast and broke. People are day trading, they doing options, and they doing all of this dumb stuff that's not actually adding value to their portfolio because you cannot gamble your way to the top. Trust me, I know. If you're investing for a goal that is years away, however, letting fear keep your money out of the market is a big mistake. When the market is doing well, people are throwing money at it. I just explained this. When it's doing poorly, they keeping their money out. It's doing the exact opposite of what you're supposed to do. And we're counting on that, right? We're counting on that because the majority of people that become super successful when it comes to the markets usually do so 1 year after a recession. They are the ones that are buying everything up at a discount. If your favorite company, if the company that you love the most was selling at a discount and you knew for a fact based off of the historical significance of what they've been putting out and all of the data and all of the information is telling you that it is a phenomenal company, would you not buy it? You absolutely positively would. Real estate. We seen it happen in 2008. Everybody got out. Well, ain't nobody had no money back then. But everybody was scared when the market was at the bottom. And then when stuff was going $150,000 over asking price, people were begging you to take their money. People are literally shooting themselves in the foot. And you are the one that could be the beneficiary as a result of it. It's saying young investors, time is on your side. And then it goes to time in the market. And it goes into, all of the different things that people try to do when it comes to time to market, so on and so forth. I don't think we need to go through all of this, but we already know. We already know that people are going to do the thing that is not best for themselves because when given the option to do it for themselves, they often take shortcuts. They don't want to be long-term. It's very difficult to be patient, which is why you're always going to have less doctors and you're always going to have a shortage of people that are professionals versus people that's looking to take the shortcut. I see people do it all the time when it even comes to the career path that they want to go into now. The only reason people are going into software engineering as much as they are is because the path seems, the barrier to entry seems easier, right? It seems easier to jump over. And so if people can take a quick boot camp class and they'll do it, but if you tell them to go to school for 2 to 3 to 4 years in order to get there, then they'll be like, I'm not so sure what's the easiest path and what's the least resistance. The path to least resistance is the path that you don't want to take. If it's anything worth doing, it's going to take some endurance. It's going to take your 10,000 hours. You're going to have to dedicate yourself. You're going to have to grow, and you're going to have to be diligent about what it is that you're getting yourself into. If you're only doing this because somebody else told you to, or you only investing in something because you see everybody else supposedly making money when a lot of them really ain't even making money, then you're doing it the wrong way and you're doing yourself a disservice. I would encourage you to do it a lot differently. I would encourage you to start being a little bit more informed and making informed decisions on how you can be successful. And then ultimately that will lead to the best growth. Otherwise, you are absolutely positively going to kill yourself. I'm telling you. And this article is breaking it down in a simple form. And that's why I like it because, I'm a C student. And if I'm a C student and I can get rich, then I know you can get rich. Real talk. Most people are going to do the worst things for themselves if given the opportunity. Don't be one of those people. Slow and steady is the way. Making sound investments. Having a plan and a budget to where you allocate the majority of your resources. It's almost like set it and forget it if you're doing the right thing. Even if you just want to pick a good ETF. Right? The worst case scenario, you could just pick a good ETF and that thing will just carry you right on through. And then you look at that thing 10, 20 years from now, you're like, oh my God, I am bulging with money. What am I going to do with all of it? And right now, everything is at a discount. The biggest problem that I have right now is trying to figure out how I can buy as much as I can possibly buy because there's so many deals on the table. And I think that even more is coming down the pipeline. I love you guys. I appreciate you. Hopefully you guys are making informed decisions instead of falling off the wagon. Do the thing that's in your best interest. Slow and steady is the way. Making informed decisions. Make sure you join the Patreon. Link is in the description as well as pinned to the top of the chat. If you need to kick it with me personally, email me at antondaniels413@gmail.com and we're going to get you popping. I love you. I'm appreciating y'all. I need y'all to do me one more favor before we get up out of here, though. Make sure you tell your family and friends because we don't want to be successful by ourselves. I love you, family. I appreciate you. I want you to continue to be successful and do the thing that's in your best interest. Do not get caught up in this fear of missing out and then selling low and then buying high. Don't do the opposite. Let's get this bag, y'all.